And here's Lydia. Hi, Lydia.
Hey, Dale.
How are you today?
Good. How are you?
Good. Thanks for joining us today, Lydia. What a great time to be talking to you with cable sitting at very important
Oh,
support at this
right,
151 level.
right.
So what do you think? Maybe at least a bounce from the post-Fed peak to where we are now?
Yeah, there's a lot of divergence out there actually. Saw a lot yesterday across the pairs that I watch, and cable's one of those. I went long. I think I went long at the bottom, well, about 51.60. I
Yeah.
got stopped out at break even when it jumped and then it came back down. Um, so I'm also looking at 52.50 because obviously we need to break above there for this train to really get moving higher. And if you look at the fibs, and I saw your tweet, you're right on with a 54.50 target if if the divergence plays out. Now, I got some feedback yesterday too that we might be seeing divergence because of month end. It's also the quarter end.
Okay.
Um,
So a lot of
so we
window
might see some
dressing,
of that.
artificial issues.
Sure.
Okay. Do you know how to share your screen on Hangout?
Yes, actually, I do. Here we go. Okay,
Beautiful.
great.
Okay, so yeah, really, besides the divergences, technically hasn't done anything right yet.
No, it's surprising that we're hanging out at these lows. We're not getting any correction. We just had this grind lower. I mean, really from the highs, we haven't had any kind of correction, which is why I have this huge fib. So if you're looking for a correction play or an anti-trend play, you're going to be looking to, go long at these lows with a tight stop below the lows, right? I mean, your risk is well defined.
Maybe
Your
we need
target,
one more divergence, Lydia. Wash out the people who have stops under that previous low trade. Everyone's looking at 51, maybe a panic under 151 before we get a turn.
yeah, I mean, maybe even historically 50.76 has been an area where we've either found support or resistance in a long-term trend on cable. So even a spike low into, like you said, below 51 into
Right.
50.76, and we still get a divergence and we don't get a close below. I would say below these lows, because it's carving out so many of these bounces, that this has become a pretty significant level. If we don't get a close on this 4 hour below these close, if we do get a move to the downside, I would be looking or expecting that this move would go higher and actually start to put in a correction.
All right. What is the significance of 5076? How did you come up with it? Is it a
Let me see if
pivot or a
you can see it on
fib
a
or?
longer term chart. Is no, it's just a level I've seen play out. I don't know if we'll see it on these bigger charts. It's just a level I've seen play out. This is 50, so 50.76 is right above it. So you can see
Okay.
here, back in 2000, what's this, 9, no, 2010, a little bit here, looks like maybe that's 51. And then coming up from the downside, you can see the spike here above $1.50. So this solid black line is $1.50. You have a spike here, which is 50.68. You have another spike here. That's not quite $1.50. So it's just after seeing this pair for so many years, you just just like the market has memory, you just have that kind of market memory. So
Right. Okay. So Yellen kind of screwed up everything again. Uh, and now
I think I don't think any of us are expecting anything out of the Fed anymore.
okay.
There was a great meme it was a Kim Kardashian meme. I think Yellen or Dudley, I think it was Dudley yesterday, was talking about we're going to raise hikes. The thing about the commentary about we're going to raise hikes this year is that there's only 3 months left. So, and then what, two meetings? I don't know if they meet in November.
Yeah,
So
October and December.
in December. So it's only two opportunities for a hike this year. And Russia just went to war with Syria. I mean, we still have things going on out of China. China's not plugged. It's not a plugged hole yet. Brazil is falling apart too. Their markets are really fastly falling, even more so now than through this year. So, and the Fed has communicated that they are concerned about some of these, outside external market events.
And they're also concerned about dollar strength.
So why would they do, after communicating such, why would they act in a manner that's counter to that? So to me, this is just jawboning. So we've seen a lot of jawboning, and I think we think that it's a negative, like, you talk your currency down. I just think the Fed is talking it up. I don't think they move on interest rates at all in 2015. And then depending on where the world is, because they're not looking at our economy. If they were just concerned about the U.S. economy, we'd have a hike.
Right.
We would have had a hike.
Maybe the market's going to do it for them, Lydia, because what I've noticed and I've been talking about the downside of S&Ps for about 100 years now,
Mm-hmm.
and finally started to manifest. And
Yeah.
I look at the TLT. And we were within 1% of the low in the flash crash low in the S&Ps, and the bonds are not making new highs. So, perhaps
Right.
a failing rally, to me, it looks like a failing rally in bonds in the TLT. So whether the Fed goes or not, I think the market could go. So,
Right.
we had that bounce with the S&Ps. It looks like be heading right back down to 114.
Right.
So
Yeah.
maybe the bond vigilantes aren't dead.
Well,
And maybe they're China and Saudi Arabia are the new bond vigilantes.
But there was 5 years ago, China was buying a bunch of bonds. Doesn't it not make sense that they would be selling bonds at this time? I mean, there's already reports about the massive selling they're doing with their dollar reserves. So I just think that there's a lot at play, and if the Fed is concerned, and they've always given a sense that they only create policy for U.S. economies and for U.S. policy, but this September they've signaled that they are concerned about the world, and given that. And we have the emerging market bond situation, emerging market currencies, which are declining or devaluing. So,
we're in a global currency equity debt crisis now.
I'm sorry.
We're in a global equity currency debt crisis now.
Oh yeah, absolutely. Yep, we have got 60 central banks across the world, lower rate or start QE. If the Fed is concerned about the world, then we're not going to see a hike. We're not going to see a hike in 2015. We will not see a hike in the first half of the year. And
maybe
what we're waiting for is the market
maybe we'll see QE next year.
That's been said too, that they would raise rates on one hand and then start QE4 on the other. I mean, we do have the Bank of England, who still does have quantitative easing. Even though they're talking about raising interest rates. So it's not uncharted waters, to raise the rates and to then also enact QE again. So
I'd like to go ahead.
No, I said we just have to see. It's all about the world now. It's not quite about the U.S. economy anymore. It's not the economy, stupid.
Right. It's not just about the U.S. anymore. That's for sure. And
exactly.
More talk about still getting the renminbi and the SDR. They're pushing for it. I'm hearing rumors that they'll do it by saying they're going to back the renminbi with gold. Maybe that's why they've been accumulating what they've been accumulating. But I'd like to. Here we are, euro pound, because I remember last time we were talking, I was saying that maybe we had one more shot up in euro pound when we were right at that resistance level, and it's been a tremendous bull move from when we last talked. I think it was back there in July.
Yeah. Yeah, so back in July, we were, about what, 71? We were
Yeah,
contending with 70, trying to get below 70. And that was the level where we were when we were last talking. And yet, we got the bullish divergence here,
yeah,
and that played out to this move to the upside. And this was the Black Monday, August 24th high.
right, right.
And yesterday, we finally eclipsed that high, and you can see we completed the fib move. So we had a really nice, even though we consolidated for several weeks above the 38.2 fib. This was last week. This move to the
Right.
downside. It held, it held in its buy zone, and it's a
Yeah, so
marginal
we have
high.
two. Yeah, we have two critical areas, the 72 and where we're at now. Because to me, it looks like it could be ripe for a failure, and especially if the pound has more zip than the euro. And I actually think there's a chance for a move back towards 71. Because if you draw a line off your two tops in May and then June, that was kind of like a falling wedge.
Hmm.
So if we're to come back and test it, I think it comes in right around 71 is what I would think
Yeah, and if
is
you
a
look at
possibility.
the bigger fib move is in here. So
Yeah.
you're we're right here at that 38.2, which is
Uh-huh.
73.60, which has actually been 73.60 has been the range top. If you look at this range top has been 73.60, 73.50. And I
Yeah.
just put out there to followers of the Quid report that if this is the level to watch, and we're sitting at it, we're about 9 pips above, but 73, 60 and 50, that little 10 pip range of support is what we want to watch if we're going to have a move to the downside, a sustained
Oh,
move to the downside. That's the
okay.
area that we're looking at, and that we're watching. But you're right, on the bigger charts, this is still very ripe for a move below 70, because this is such a great fib move. It's such a
Or,
great move for the euro pound.
or how about that we have kind of a neckline of a head and shoulders, and we're going to put in a right shoulder down around 71. Because if you look to the left side of the low, you kind of have a shoulder
Right
there.
in here.
Yeah, yeah,
And then here's our head.
yeah, yeah, head and shoulders.
Hmm.
What's his name? Troy Polamalu, and now they have another guy doing the commercial. So,
I'm not an expert on the chart patterns, especially when they're in the making. I can see them once they probably formed out a little bit,
yeah,
but that
well,
would actually give us a signal to the upside, which I'd
right,
actually been looking for 75 on this consolidation correction move. I really
yeah,
thought that if we popped above 74.20, we'd actually see a continuation up to at least the highs back here in May,
yeah, that could happen.
74.80. Yeah, 74.80. So that's the move I'm actually looking for. Right in
Okay,
here, and this is a 50% fib move too. So
okay,
kind of looking for resistance at the 75, and then a move lower. So what's also interesting about the euro pound actually is these last several weeks, they've been very, very correlated to risk flows. And I know a lot of people don't want to call the euro a safe haven, and I'm not calling it a safe haven currency. What I am saying is that it's correlated right now to risk flows. Um,
yeah,
and when we're
the
seeing risk
higher
flows
euro,
in the
lower equity,
market, we've seen the euro go higher. It's
right.
just what it is. You trade what you have.
Weak dollar, weak equities. Strong
Right,
dollar, strong
exactly.
equities.
That's exactly right. So it's become the euro and the yen, and we've been playing these moves for the past 3 weeks, and it's been holding out. Especially while we were in this range, we could always look to equities, and U.S. equities in particular, and to see how these markets would move. Even better, if you look at the pound yen has been
Yeah,
slightly leading equities.
yeah,
So we'll get the move
yeah,
higher, like we've gotten this move higher. So now we're below 180, 82, which makes me very wary about how we end today. So we have this open, this gap up, and we're rallying a little bit. If we see the end of day selling that we've been seeing, probably since we've come down into these levels. If we see the end of day selling that's actually being eluded by pound yen, we're going to see the euro pound bounce off this resistance level. Well, the former resistance
Okay, and
level.
I've seen counts in the guppy, some guppy bears talking about, and that's going to probably means that this is a short-lived rally in S&Ps. They're talking 170, 181 being a critical long-term trend line.
Absolutely, that's what we're looking for. Like I said, if you're following the Quid report, we've been looking for. Right now, we're looking for a return to these lows. Ultimately, we're looking for a return to these lows, 174.
Okay.
And if we do get that move, we'd expect to see a move below these lows. And on the this is the SPY, but on the SPY,
Right.
on the actual 500, it's 1867. So if we get below that, if we get this move that we're anticipating, we will get that this move here. We will see S&Ps weaken. We'll just see it weaken further. So kind of all these interplay, that's probably one of the funner times in the market right now. You don't have to trade a whole lot of pairs because of the interconnectedness. We just play the flow.
Everything's correlating with what's happening in equities now.
Yeah. It's all about U.S. equities right now. And I sound like a repeated record because if you read the Quid report week after week, I've been opening for the last 3 or 4 weeks with it's all about S&P 500. It's all about world stock markets. It's all about global equities. So that's what's running these markets right now. And I think I said to somebody else on Twitter, you trade the market we have, not the market you want. So we all want, the Fed's just not going to raise interest rates, but you can't tell the dollar that. We've been seeing dollar strength.
Right.
You play the market you have. This is what we have. So
maybe the emphasis is going to change from watching S&Ps every day to beginning to watch the bond market. A lot of people are talking about sovereign debt crisis. So interest rates might rise without the Fed, and I've seen it before.
Okay.
So, that could be also another factor, and most people think S&Ps and bonds can't go down together, that they're usually a flight to safety trade.
Right.
It may not be a place to hide anymore.
Wow.
So and what are you seeing? What are you seeing in the pound against commodity currencies? We've had a bounce in the oil market, and we have a nice little bounce.
Yeah. And what we've seen, like with these bounces, is we've just seen a whole bunch of consolidation. So if I pull it out, because I've been trading this morning or looking at markets this morning, I can get these out a little further. We've seen a lot of consolidation. And pound kiwi is one of my favorites. But we see this falling wedge in the pound Aussie. Okay. We have this, if it's going to come out, you can kind of see it. Let me refresh that one. In the pound kiwi, we've seen this ascending, this ascending triangle. And in the pound CAD, we've just seen it range bound between 205 and 201. So it's a lot of consolidation really as commodity prices consolidate. Now, I don't want to call it one way or the other. I'm going to stay with the trend. The trend is obviously bullish, and it could use a correction. So this is the pound kiwi. We could use a correction to 230. We haven't really had one. So the pound Aussie, we could use a correction to 213. We haven't had one. So I'm not necessarily bearish on the pound versus commodity dollars. I think what we're seeing is as commodity prices have consolidated, we're just seeing the pairs do so in like manner. I think also, given that we're at the end of the year, it's the beginning of the end with the end of the third quarter, we might see profit taking, and these are some tremendous rallies, and it wouldn't be surprising if we did come off these highs a little bit further and start to see.
It doesn't look complete. It looks like it should have another touch of that lower blue line.
Yes, you mean the pound Aussie. Yeah. And we just haven't gotten it yet. So We've just kept coming in at these 215, even down here at 214. We just keep getting these touches, and I know I've been calling for a move to 212, and we just haven't seen it, and instead we've become range bound into this falling wedge pattern. So even here, as we broke the 61.8, which would have signaled a move into 219, 220, we failed out, it petered out, and now we're back at lows. So we are in massive consolidation. I'm really not trading these pairs much until we get a break of the range in either direction.
They're no man's land.
It's in no man's land.
Yeah.
Yep, I said that yesterday. Just the pound CAD is right here in no man's land, and it, I think there's a bullish bias because I'm going with the trend. But as you pull out to this daily chart, we're here in the sell zone. It could come back to these lows at 202. 201 is critically important for the pound CAD. 212 is critically important for the pound Aussie here, and for the pound Kiwi, we're looking at 232.50. And this is on the moves to the downside. And so I think pound Kiwi is actually giving us the cleanest look to that we're actually making that move to the downside after consolidating and ranging up here between 246 and 240.25, the range, the triangle top. Last week's close below, and now this week we rallied up right above 20. I think this is 241. It came to right above this triangle top, and now you've seen we've gotten these consecutive closes lower. So this is probably the cleanest look for a move to the downside. And with nothing really coming out of New Zealand this week, if we get a beat in the Chinese manufacturing PMI, which is really what these commodity dollars are kind of waiting for that release. I think that's Thursday night. If we get a beat, then we're going to see all of them come off significantly.
Okay, so the 201 level was critical in which commodity pair?
What? I'm sorry, repeat the level?
The 201, you mentioned 201
pound CAD.
One pair, and 212.
Pound CAD and the pound Aussie is 212.
Pound CAD, pound Aussie. Just for my reporting of the interview. Okay, so some great looks, Lydia. How's business?
Thank you. Business is going. It's going well. We're a few subscribers and clients coming on board, and so it's just an everyday grind. And I'm liking the challenge. Okay,
you have to be a warrior. So why don't you show people how they could get your Quid report and follow you on Twitter?
Bit.ly. Go to the Quid report. You got to have capitalized Quid report. And it should take you to the product page. Here, I have a few reviews. I have some really great readers give me great feedback.
Yes, you have subscribers here out of our community.
Yes.
And, nothing but great reports.
They told me that. When they joined, they reached out to me, said one guy, he said he heard me on our interview like a couple years ago, so it had to be one of my first ones in the room, and was really excited to have me launch the service. So that was really amazing. So it's really cool,
And reasonable monthly rate, 7.5 pips.
That's what I love. Yeah, I love your saying. Yep, it's just 7 pips.
Yeah, and, so that's a spread on some exotics. So
right.
I want to thank you so much for being with us at a critical time in the market, Lydia. Summer is over. I'm hoping that you have a great fall trading season and the pips rain down on you and all of your not prescribers. I'm thinking about the medical profession. All your subscribers, Lydia.
Thank you, Dale. Thank you so much for having me. Thanks.
All right. Good hunting, my friend. My trading warrior sister, Lydia Finkley at Faith Might. Thank you, Lydia.
Thank you.
Great interview.